All right, time to wrap it up for October the 14th, 2014, a post-Columbus Day market. We had a pretty good day today. The first trades early in the morning, and I've often thought about renaming our service First Trade of the Day, but we had our first sell 79 to 81, then 84 to 86, and then we said before the rally up to 90.92. If we made new intraday highs, the sell zone would be 90 to 92 for S3. And that's pretty much what happened. The market, we said today, would swing on this player right here. So here's buying, here's selling, here's short covering, and here's renewed selling. And we've got more selling here after the market slows down. We started off this morning wanting to buy 70 to 72 and 65 to 67. So our buy zone worked out just really, really well. Our first sell zone early in the session worked out well here. S2 came in right here, and then our S3 kicks in well above here. So we had a good day of trading. The easiest trades off of our prescribed setups came right here. 2 shorts. If you decided to get short here off of V top, that's a very aggressive trade. But we talked about it again this morning. We said in these very volatile situations, if you're going to catch the tops and bottoms, you're going to have to take a V bottom, V top strategy. Right in here on the long side, you'd have been long in the 75, 76 area. Another setback trade here would have had you long in the 82 area. Another setback trade here would have had you long 84. Then setback trade here would have been lost to scratch. Setback trade right here would have been a winner. Setback trade right here would have been a winner. Setback trade right here would have been a winner. So the trades aren't perfect, but they will put money in the account if you take the trades that present themselves to you. So what do we have for today? Which way is the capital flowing, into the market or out of the market? And we talked about this on the last update that definitely as long as we stay below 1900, the market was a sell. And you can see that we have this 90 to 92 area, that low, and that low is pretty good resistance, and that's where the market came. So it came back up and retested these structural lows, and they held. And now the market's trying to trade lower. So this screen, lower high, lower low, has you a seller. We do every market the same way. We don't change our approach. Everybody, are you kidding me? You can make that kind of assessment. Essentially, what is it? The bar chart? Yeah, we can. And we can make that because it is the profile and because of the combination of profiles or trading days that come before that. It's pretty easy to see the P's and the B's. Okay, taking a look at this screen right here. We may have a new distribution headed lower here that started in a K period. Obviously, we've got to take out C for this to be true. Looking at this screen right here, because we have all of this volume down here as opposed to volume up here, definitely leaning B. So this screen favors a sell too. Now tomorrow we have a lot of news. We have retail sales, -0.2. X-Auto, +3. Empire Manufacturing, index, 20.4. The -0.2 will not be supportive, but core at +3 will be. Empire Manufacturing at 20.4 will be. We have PPI information that no one will pay any attention to because the San Francisco Fed governor said, you know, if inflation gets back down or starts to move lower again, we'll consider QE4. And if the Fed says QE4 is in place, the stock market's going to rally again. Business inventory, nobody pays any attention to, at plus 0.4. And in the beige book, where the Fed goes around and assesses the industrial and economic conditions in the 12 federal governing regions. So if the market were to close at 73, 79 to 81, sell 1. And then 84, 86, sell 2. On the buy side, I think if we were to close right here, we're headed lower. So I would think we would head lower yet. 60, 62 would be buy 2. And for the overnight session only, a 65, 67 would be buy 1. If we close this market weaker, and I mean the whole move could be over, you know, in P period, depending on how low this market goes. So again, the market really is back in a sell mode, and the Fed's intervention into the market has not been hadn't been advertised, if there has been any Fed intervention at all. So again, as long as the markets are orderly and the bottom's not falling out of the market, the Fed can handle some selling. A 10% correction takes us back to 1800. It's not that far away. Okay, higher low, higher high. This makes us a buyer on this one. Oh, really, Charles? Well, I mean, even reading a bar chart, not talking about these moves out of the middle, that's pretty standard take on the market. And so you're looking at pretty pronounced P's and double distributions, etc. up. So we're a buyer based on this. We talked about it earlier. I don't think anybody dumps in a meaningful way positions in treasuries just because of all the uncertainty we're dealing with. I mean, who comes out and says in 2 months we'll be having 10,000 new Ebola cases a day? Now, that doesn't mean we're going to have them, but when you take a fairly uninformed public and you take the news pump by the mainstream media, it'd be pretty easy to whip up a lot of concern, a lot of hysteria off of that, and that, quite often that's the purpose of the press. Bad news sells. So they'll see 10,000 Ebola cases a year will be the headline, and they'll have to go read the articles where they'll find out that who is estimating that this is where we'll be a couple of months from now. If we were to close right now, resistance is at 16 to 17. So our first trade would be selling failure. Take out 20. And then the second trade would be 23 to 27. Now, if the E-mini is selling or gets buried this afternoon, we're not interested at all in getting short, period. I mean, it's just the way that it is. If the E-mini gets slammed this afternoon, we're going to be lucky to be able to buy 17s. I'll put our buy down in the 5 to 9, and we'll circle 13 for the overnight session as a possibility. So let's, and a lot of it's dependent on the E-mini. If the E-mini's rallied back, we'll want to buy the 9s or better. If the E-mini's get slammed, the buy could be as high as 17. So we'll leave it at that. We're going to, like this morning, we're going to key off what happens in the E-mini. Longer term, I don't think think anybody's really super excited about getting short the note just because of what's going on right now. Knob spread held, actually strengthened a little bit. And again, the 30-year rate's below 3%. There's a reason for that. Number one of them is dollar strength. The other one is when the rest of the world looks around, we're the least of bad choices. We're still more transparent. I mean, would you believe any economic report or any proclamation that came out of China or Russia? No. How much money would you put in that? You'd put some risk capital in. Something you thought you'd have control over, so building a factory there would probably make more sense than buying stock markets or buying securities in factories because you have less control over it. Again, looking around the globe, you got problems. Germany's is the EU financial backer, and the recession is coming back to the EU, which means that they'll have to finance the pig's paper once again or roll it over. Okay, we're going to sell failure to take out 43, what, 07? And the way this thing moves, 15 to 19. And this market's telling us that the E-mini's going to get hammered. On the buy side, last rotate stopped at 18, so like 17 to 21. We're going to give it some room. And if the E-mini is selling, we will have to pay up. And then 5 to 9 beneath that for buy 2. So we'll be keying off of what goes on in the E-mini. Okay, gold. Not breaking out in a big way. A lot of interest has been lost in gold, and the reason for that is that the major players are not accumulating, large institutions are not accumulating gold. Now, the retail account is, and central banks are. So you can see we're rejecting prices over 38. We're at 34 right now, so it's 38 to 40, sell one. Our 45 plus, say, 43, 45 would be sell two. And we've got these attractors up here that might pull us to them. On the buy side, we got down to 31, so 30, 32. And then buy 2, 25 to 27. This buy 2 against 25, I think, represents probably the best place to get long. And selling failure to take out and hold 40, I think, is a great short. It's a B pattern. It favors a retest of support, getting stops beneath these numbers. We'll see if it happens. If the E-mini spills, we're going to have to pay up to get long. It's pretty simple. Looking at crude, crude's just getting nailed, and it's got a nickel. We'll make it a dime just so we can pick up what's happened. And it's just been slammed. Saudi Arabia said $80. I mean, we've had some $3 and $4 moves to the downside when this thing takes off, and we have a new move that started at 84.50 in G period, 83.50, $83. Last rotate up stopped at 82 and a quarter. So this market is just getting hammered, and like we've talked about before, futures don't mess around. If the expectations are for the market to get to 125 or for 80, they go, and it happens really fast. So you can see this 83.50 to 84 area right here is pretty stout resistance, and I wouldn't be surprised to see a revisit there. So we're at 81.90. Last rotate up was a quarter, so a quarter to 50 will be sell 1. Then 83 and a quarter will be sell 2. On the buy side, a little bit lower, so 81 and a quarter. And then our 80 and a quarter for buy 2. But the market's just getting nailed, and again, for a long time we have not liked the long side of the market. For obvious reasons. And it boils down to supply, and demand is softening all over. And if Saudi Arabia is going to lift and pump 8 million barrels a day, those of us that import Saudi Arabian oil will get it from Saudi Arabia first because they are the most significant and the most important oil producer. Be interesting to see how who China props up, probably Iran. Okay, the euro held in pretty good today. Goldman Sachs came in today and said Europe was in a recession, including Germany. You'll see that reported with third quarter numbers. ECB rhetoric has been supporting the market. It swings with the dollar. 125 was this year's trading target for Goldman. We got really close before we rallied up back above 127. So we have a volume-wise, we've got a fairly square distribution. TPO-wise, leans B. Based on the fundamentals, I would think that it means Europe is printing more money. We'll be borrowing more money to spend. Accounting entries at their local banks. I'll give you my paper, which allows me to get your paper, and everything goes on as it is going on right now. So we're at 60. The last rotate up stopped in that 75 area, so we'll make sell 1 where we had it this morning, 70 to 80, and sell 2, 90 to the buck. On the buy side, I think we can get stops beneath 50, but that is where support is, and I really don't like, especially our number 1 buy levels, but we'll make 20 to 30 leaning against a quarter for buy 2. So I think we're headed lower, but based on what happens in the E-mini, may not be tomorrow. That's all I have for the 14th of October. I'll see you bright and early in the morning, 6:45 Central AM. You all have a great evening. It's going to get close to 70 this afternoon, but it feels like fall has finally arrived. See you in the morning. I'm out of here.